Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to yet another promising edition on the Forex Morning Mastery, your daily dose of financial insight and trading strategies. My own name is Sheriff Daramola, and for the next 30-40 minutes we will be revisiting the financial assets on our watch list with the utmost intent of managing our existing positions while we also look out for more trading opportunities to capitalize on today. And as we prepare for today's London and New York session, we've been monitoring three assets on our watch list since the week began, and that is the USOILSPOT, the GBPUSD, and of course the XAUUSD. And so far since the week began, we've done fairly well across these assets. We have good positions on the USOILSPOT, the same thing with the GBPUSD, except for the gold pair, which isn't doing very well at the moment as we witnessed our first stop loss for the week. So today is another promising day as we look out for major events coming in from both the United States and the United Kingdom, which is going to definitely bring some fresh impetus into the market today. So I have interesting trading setups that we will be using to guide our trading decisions for today. So I encourage you to stay tuned in so you don't miss out on these insightful ideas we will be deliberating on today. And before we move into the details, I do know that there will be some of us out there who are just joining us for the first time who really do not know what the Forex Morning Mastery is all about. Well, the Forex Morning Mastery is a platform that was born out of the necessity to do live follow-up details on my weekend videos. So usually during the course of the weekend, I share a couple of videos detailing what my plans are and what my thought process is on every particular asset in anticipation of the new week. So during the Forex Morning Mastery, we gather here every day, come together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the London and New York session. It officially kickstarts about 8:05 a.m. UTC, 9:05 a.m. West African time, and my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach, utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that are likely going to be influencing the market sentiments today. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed and of course timing to position ourselves for the next move. So based on the asset we are monitoring for this week, we have been focusing on economic features from both the United States and the United Kingdom. So for today, Tuesday, March 12th, we have a handful of high impactful events to look out for, and we already have about 3 of them happen coming in from the United Kingdom economic docket. And so the first one from the United Kingdom, which happened this morning, in fact all the data we got from the United Kingdom was more of an insight into their labor sector, and things are not looking very rosy for the United Kingdom, as you will see here. The first one here is the high and low unemployment rate, that is the International Labour Organization unemployment rate, which provides us with a comprehensive measure of unemployment, encompassing individuals actively seeking employment and those available for work but not actively seeking. And usually when the data is higher than the expected figure or the previous month, it is not a good signal at all for the United Kingdom. And look at what we had here this morning. The data came in higher than the consensus projection at 3.9%, giving us a positive deviation of 1.25. So this is not a good signal at all. And we saw how the pounds reacted, how the market reacted to that event. So we are going to be looking at the chart today to see how we are going to be managing that position. Then we also had the employment change data, which usually gives us the net change in the number of employed individuals month in, month out. And what we have here is also not impressive, as we have a minus 21,000 compared to the previous month, which was had 72,000. So that data too is not a good development at all, as you will see here. Then we also have the claimant count change, which generally a high reading is seen as bearish for the pound sterling, while a low reading is considered as positive for the pound sterling. Now, the claimant count change is the net change in the number of individuals claiming unemployment related benefits over the last month. Now, if we look at the data here as well, it came in below expectation at 16,800, and look at the previous month here, which was at 3,100. And like I said earlier, a higher reading is not a good signal, though it's below the expectation. But if we compare it with what happened last month, it shows that things are not also looking rosy there. So the labor sector in the United Kingdom is not doing very well at the moment, and we want to see how the market has reacted to this event. And if we consider this, the path of least resistance should be to the downside. So we'll be looking at that in a moment. Then later on today, I think in about 3 hours from now, we will be listening to the speech from Dr. Catherine Mann, who is the member of the Monetary Policy Committee of the Bank of England. So she's going to be giving a speech today, and following this not impressive data, we want to hear what she will have to say as regards to the economy, and this of course will give us an insight into the monetary policy outlook of the United Kingdom and of course the economic situation of that country. So we will be looking forward to what she has to say at that time. So let's keep ourselves posted. Let's mark out this time on our calendar. Then later on today, one of the most important events for this week is coming in from the United States, and that is coming in about let's see, about 4 hours from now, which is the Consumer Price Index. Now, this is a significant economic indicator that measures that examines the average change in prices paid by consumers for goods and services in the last 1 month. And a higher than expected CPI can lead to concerns about inflation impacting market sentiment, as it may prompt expectations of tighter monetary policy control to rising prices. So this is one event everyone is looking forward to, especially after we witnessed a downturn in the US dollar in the last 1 week, and majority in the market are not and following the Fed chairman's testification before the House of Congress last week, where he did emphasize that interest rate cut is imminent due to the fact that inflation is gradually getting close to their target of 2%. Now, this is a signal that has resulted in a bearish momentum against the US dollar. Now today we want to look forward to what this data will be. Remember, this is an inflationary gauge data which gives us an insight into the inflationary pressure in the United States. And looking at the figures we have here, for the one that exclude the food and energy, month on month and year on year, the last month came in at 0.4 and 3.9% respectively, and economists are projecting a 0.3 and 3.7% respectively. So expectations are low, so we are looking forward to a low inflationary data today. That is, if the data remains at 3.7 or below that. But one thing we need to take into consideration is that if this data is higher than expected or even higher than the previous month, this will favor the US dollar, and we may likely see a positive traction in favor of the dollar. So let's take note of this one while we continue to monitor price action. So these are the events we are looking forward to today. So it's important that we mark out the timing so that we can be around to capitalize on this move when the markets anticipate or react to it during that time frame. So with that being said, here we will be diving right into the business. And as usual, the first asset we are going to be looking at this morning is going to be the USOILSPOT. And what an interesting development we have in this market. Remember, we have been buying this asset since the beginning of the week, and of course I did emphasize, I did give more chance for buyers to come in here, considering the fundamentals we saw at the beginning of the week. So at this point we have about 2 buy positions, though the position here did not come with its own shortcomings during yesterday. Remember, we had our first buy position triggered at the breakout of both the $77.40 level and our key level at the $77.50 area, and we saw how price action moved about 50 pips thereabout on both positions, and I can remember informing us to move all our stop losses to secure the current buy position while we continue to monitor price action. And if you had done that, we saw how price dropped back, taking us out of that positions at break even, and it appears some of us took advantage of this one. I didn't know how I missed out on that one, which went into a loss, but finally during the later part of last week we had a successful re-entry at both the $77.50 level and the $77.40 area to trigger the current buy positions we have right now. So at this juncture we have 2 active buy positions from yesterday's trading session, dovetailing to 3 buy positions, sorry. So we have the first one running with about 82 pips in profit. The second one is running with about 72, that's about 150, while the third position, which is at the breakout of the $78 area, is running with about 25 pips in profit. So at the moment we are running with over 180 pips, and for those of us who did capitalize on this opportunity, well done and kudos to you. So I will be encouraging us right now to move all our stop losses to secure this current buy position as we continue to monitor price action. And if you will ask me, anywhere below that $78 area seems most appropriate to secure all positions, and always remember to give enough breathing space for price action to move around. So if we get taken out around this area, at least we will be making a minimum of 100 pips on the 2 positions opened earlier. So with a well secured position at this juncture, what is going to be our plans for today? Well, it's important that we consider the upcoming CPI data from the United States. Remember, this asset is a US dollar denominated asset, and due to this, whatever happens to the US dollar is expected to affect the price of or the demand for oil. So in light of this, we might likely see some choppy market conditions in anticipation of this event. And another thing that we're also going to be looking forward to is the OPEC monthly reports, which will be, I think it will be released today. Then we also have the International Energy Agency, which will be I think that is coming up tomorrow. The International Energy Agency report is coming up today, and the EIA, that is the Energy Information Administration report, stockpile report, is coming up tomorrow too as well. So these are key events that may influence this market. Hence, we need to also take into consideration the anticipation of this event as well. So given these factors, let's secure our current buy positions while we continue to look out for more opportunities. So there's nothing much to say here. We have 3 buy positions triggered. We've moved our stop losses accordingly. Let's see how the market reacts to the structure. And if anything new comes up along the line, I will definitely give you updates on both my TradingView and Telegram platform. So we have a couple of ascending trend lines here, which could be supporting this bullish momentum this week. Let's see how the market would react to this trend line. So I have a couple of them right here. And you know how we use our ascending trend lines. As long as price remains above them, we shall feel comfortable in our buy position. Let's see how long it's going to stay above the structure today, and I will be giving you updates on my TradingView and Telegram platform. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions before we move on to the next assets on our watch list for today. All right, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. Stay tuned in. So the next asset we are going to be looking at this morning is going to be the GBPUSD, which has been doing very well since the beginning of the week, as we have been selling this asset after the breakdown of our range bound structure we identified yesterday. So for the sake of clarity and for those who missed out on yesterday's session, let's run through what really happened during our live session yesterday and what led to the decisions we made. So during our live session yesterday, we did acknowledge that price action has been confined within a range between the 1.28650 level and the 1.28450 area to emphasize the prevailing uncertainty in the market at that point in time. And usually whenever we have a range bound structure like this on the chart, we usually exercise patience, waiting for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. And of course, during our live session yesterday, we already have a sell position triggered as we saw price break down the structure. And for those who missed out, we did emphasize that we look out for retest to continue the downtrend move. And to maximize the potential of this bearish move, we added more levels, multiple levels. We had a 1.28250 level where we said we will be having a sell stop order to trigger the next position. And then we also added one more at the 1.2800 area to capitalize on this bearish move. So at this point in time, we have a minimum of 3 sell positions, where the first sell position is currently running with about 66 pips in profit, while the second one is running with about 45, that's over 100 pips, and then the third one is running with about 22 pips in profit. So as at the second day of the week, we are running with over 120 pips, which is not bad for the start of the week. And for those of us who are part of this profitable journey, well done and kudos to you. So at this juncture, it is essential for us to safeguard all the current sell positions by moving all our stop losses accordingly. And if you would ask me, anywhere above this third entry point at the key level seems most appropriate to move all stop losses to, while we give enough breathing space for price action to move around. Now, with a well-secured position at this juncture, what are the chances we have for today? Well, it is very important to emphasize here that this bearish pressure we see here stems from a shift in risk sentiment, which is benefiting the US dollar at this point. And according to the recent report we got from the United Kingdom this morning, things are not looking rosy, leading to the belief that the path of least resistance for the pound sterling is more or less to the south. However, we should also take into consideration the anticipation of the US Consumer Price Index, which is coming up later today, and this may likely provide some fresh impetus into this market. And like I said earlier, if we have a strong CPI report to date, this may probably diminish the likelihood of an immediate rate cut by the Federal Reserve, which could in turn bolster the US dollar and pose challenges for assets that are paired with it. So at this point, we ensure we secure the current position as we look forward to what the CPI data will say, and whatever happens today will further give us an idea of where price is likely going. So in the meantime, we will be using the current structure on this 1 hour time frame to guide our trading decisions going forward. And what I would like to do here, since we have a series of lower highs since last week Friday, we want to acknowledge some trend lines which we will be using to support this bearish move to the downside. And if we do that correctly, we have something like this. So I will thicken this one a little bit, and then let's give it a red color to emphasize its bearish nature. And then we have some extension too as well, which we will be using to support this bearish move. So let's bring back our candle chart and then do some little adjustment. Okay, I think everything is quite intact here. So we shall be waiting to see as how far this bearish momentum will go. So you know how we use our descending trend lines in this community. As long as price remains below this descending trend line, we shall feel comfortable in our sell position while we look out for more opportunities to sell. So let's see how the market will react, and do not forget that we may likely see some retracement move. So if we see any buy pressure, we shouldn't get carried away that this may likely be a reversal setup. Let's understand that price still remains below the descending trend lines, and we could still see downtrend continuation happen from this area. And the only condition that will make us consider buying this asset at this juncture is for these descending trend lines to be breached and broken to the upside. And in fact, I would like to see price break out in such a way that it will climb above the resistance line of that ascending channel we identified on the higher time frame. Now, for those of you who have not watched my weekend video on the GBPUSD, please do so that you can get a background understanding of how important these structures I'm referring to on the higher time frames are. So I would like to say something like this, and besides that, I would want to see some series of higher highs and higher lows on the lower time frame above this descending trend line before considering buying. But trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. So at this point, we still maintain a bearish bias on the GBPUSD, and let's see how far this bearish momentum is going to go. So this is my simple view on the GBPUSD. If you have any questions, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. So while we wait for questions and inquiries, you can use that time to mark out these levels on your chart, as they will be important in helping you make your independent trading decisions today. See you soon. If you have found this content helpful and useful in making your independent trading decisions so far, I really appreciate your support by giving the video a thumbs up. Your likes are valuable to me and also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you very much as you do so. So in the absence of no further questions, I'm of the opinion that we are all on the same page, and I do hope you've moved all your stop losses for this current sell positions accordingly. Very, very important. And so with that being said, let's move on to the final asset on our watch list for today. So the next asset we are going to be looking at this morning is my favorite, of course, and that is the XAUUSD, popularly known as the gold spot. And on this asset, we recorded our first loss for this week on the XAUUSD. Remember, during our live session yesterday, we did acknowledge that trading activity was more or less range bound, and in fact, as at yesterday, it was around the $2,189.50 level and the $2,177 area, to emphasize the prevailing uncertainty in the market at that particular point in time. And due to the situation we had as at yesterday and the continued buy pressure, we had, as we saw, that the support line of that range was difficult to be broken. I did readjusted a buy entry where I said I will be looking forward to buying at the breakout of this particular structure at the 2,182. That is, capitalizing on that bullish momentum before the breakout of the resistant line of that range happened. And during our XAUUSD live window yesterday, for those of you who are part of that session, we saw the breakout of the structure, which triggered our position, and of course we had a stop loss right below the 2,175, which of course we got taken out of that position as we saw selling pressure is resumed in the market, which may be as a result of some repositioning in trades in the market, which has exerted pressure on gold, especially as market participants look forward to the US consumer inflation figures coming up later today. And due to the expansion, due to the bearish pressure here, I had to readjust the support line of that range. So the range has now expanded from where it was yesterday into the $2,175 level. So we have a new support line for our range at this point. So I would like us to mark this one on our chart. Let's readjust everything accordingly to suit what we have here. So with the range bound trading activity still going on, I'm of the opinion that market is consolidating the profits they made last week. We should also consider the psychological expectations that comes with price action hitting an all-time high. And now let me reiterate this: whenever price action hits an all-time high, we usually expect that there will be choppy market conditions due to the emergence of fear, as those who are taking advantage of the bullish momentum right to this current moment may, out of fear, want to start closing in some of their position, and this is as a result of fear of a crash may happen around this area. So usually this reflects on the chart as retracement move, choppy market conditions, or consolidation phase, which is peculiar with what we have here. Now this range bound trading activity has a tendency of transitioning into either an uptrend continuation pattern or a reversal pattern. But if we look at the way things are going here, look at the first time price tested the highest point for this week, which is at the $2,189.50 level. The next attempt to break out of the structure was not met. As you will see, we have some series of lower highs, and it appears that price action is gradually pushing further south. Now with the situation here, the chances of selling opportunity is gradually becoming visible. Now other factors needs to be taken into consideration as well. Now looking at the US Treasury bond yield, which is yet to pick up at this point, and we all know how the US Treasury bond yield is directly proportional to the US dollar. So if the US Treasury bond yield is not doing well, so will be the US dollar, and if it's doing very well, so the US dollar too will rise. But at this point it is struggling, so we're seeing that effect rub on the US dollar too as well. Now the question here is, are we going to see a reversal pattern today, or are there chances that buyers may push price to the upside? Well, I'm of the opinion at this juncture, and looking at the nature of price action in the last 24 hours, I'm of the opinion that market participants seems reluctant to continue with an aggressive stance, especially as we look forward to the US consumer inflation figures. So due to this reason, we may continue to see an extended sideways trading activity as major key players in the market step aside, waiting to see what the data will be before making any investment decisions. So the figures from the US consumer inflation data is likely going to influence the Federal Reserve's policy decisions and could provide a new direction for gold prices. And please remember that a higher than expected CPI report might reduce the chances of an immediate rate cut by the Federal Reserve, potentially strengthening the US dollar and creating challenges for safe haven assets such as the gold. So we need to take this into consideration, and patience is very much required here. So what are the things we look out for to buy? Well, we want to see price break down the support line here, taking out all the buy positions around the structure for us to consider selling. Now there are ways to which we can join this, considering the nature of trading activities in the last 24 hours as market participants look forward to the CPI data. For those of us who were profitable last week, that we took advantage of that bullish potential we took last week, you can afford to put a sell stop order below the 2,175, since we have profit in the kitty to bank on to capitalize on the bearish move. However, if you are new and you are yet to make any profit on the XAUUSD, I will suggest that you exercise patience and wait for confirmations like retest of structure before jumping into any sell position. And remember that for those of you who had watched my weekend video on the XAUUSD, remember that this is the resistant line of that ascending channel we identified on the higher time frame. Now it beautifully shares a confluence with that support line of that range. So if price action can break down and retest the structures, we will be within the seller's territory, and it will make quite a lot of sense for us to sell. Now the next question will be, how far will the bearish momentum go? Well, at this point, I'm looking at the key level first, which is the $2,143.50 level, which will be dovetailing to a minimum of 300 pips to catch here. And after which we will see how price will react to the structure to determine if we are going to be adding more sell positions or getting ready to buy if reversal pattern emerge above that area. So this is my view here as regards selling the XAUUSD today. And if we are going to be buying this asset, sincerely speaking, based on what have been seen here in the last 24 hours, I would rather want to see price take out the highest point for this week, which is at the $2,189.50 level, before considering buying this asset. So let's see how the market will play out, and of course I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. And for those of us who are joining us for the first time, we are at the end of this session. You will see the link to the XAUUSD live window, where we all come together to monitor real-time price action on this asset during the New York session. The session officially kickstarts about 5 to 10 minutes into the New York session and lasts about 5 to 7 hours during the New York session, where we shall be monitoring this asset. So you want to be part of that session to see how we monitor the gold real time. And if you have any questions as regards to my current setup or my illustration, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds to see if there are any, while you also use that time to mark out these levels on your chart. So I see your comment made on Hearth. Good morning to you, made on Hearth. How are you doing? Trust you're doing very well. So you said here that, do you think GBPUSD will pull back before it drops? Well, that's a tricky question. Well, no one knows if it's going to pull back or not. Let's look at the chart together again. So no one knows if it's going to pull back or not. But what we try to do here is to mark out structures that we will be using to guide our decisions. And if it's going to pull back, well, we would be seeing some signs like double bottom structures, head and shoulder pattern around this area, or a series of higher low sort of a thing, which could take about an hour or two to happen. Then if that is going to be the case, then we can come here to stay, that is at area between the 1.28250 and the 1.2800 area, to wait for patterns and structures that will help us continue the downtrend. So if price comes back, we look out for double top structures, mark out the neckline, and then sell the breakdown, retest of the neckline of that reversal pattern. So to answer your question bluntly, I can tell for sure if price will retest, but what we will be doing is monitor price action and see if we can see signs of a potential reversal before the continuation happens. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. I hope I answered your question, made on Hearth. And if you still have any, please let me know in the comment section. And I'm still seeing that the likes we have here is not entirely with the number of people on board. The only way you can support this community to grow and support this channel is by clicking on the like button. Your likes are valuable to me, and of course it also helps the algorithm promote the video to a wider audience of traders who may find this beneficial. Thank you in advance for doing so. And in the absence of no question, I think it's on this note we have come to the end of today's Forex Morning Mastery session, where we were able to attend to the 3 financial assets on our watch list, which includes the USOILSPOT, the GBPUSD, and of course my favorite asset, the XAUUSD. And we were able to identify simple trading setups that we will be using to guide our trading decisions for today. And I do hope you marked out these levels accordingly. If you had done so, well done and kudos to you. And also remember that every decision we make in the market is more or less an educated guess until price action hits your TP target. So as a result of this, we want to be ensuring that we have a well-defined risk management strategy in place to mitigate against any risk on our portfolio. For those of you joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you did, look forward to seeing more of you same time tomorrow, as we come here again to review how well these assets have done and how the market has reacted to the CPI data, and of course prepare for tomorrow's session, which promises to be another exciting one. I wish you the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.